And so what we want to go ahead and do is a quick introduction. My name again is Tracie Schmidt. I am a mortgage loan officer with Supreme Lending, and I'm hosting calls every Tuesday for active duty military and for veterans, just going over different topics to help them build their financial future. So last week we had how to purchase a home and use your VA entitlement. And this week we have Ben, who is a financial advisor, and I'm going to let him just take a second. And if you could unmute Ben and then introduce yourself, that would be great.
Hey guys, my name's Ben Schulte. And by the way, it's my fault that the meeting starting late. I was challenged with Zoom and I apologize, but I'm a financial advisor in Oceanside, California. And I'm also a disabled veteran. I've got a 100% VA disability rate. So when Tracie allows me to speak, I'm going to tell you a little bit about the VA process and answer any questions that you might have on it. Back to you, Tracie.
Awesome. So I know that we wanted to touch base on some just really initial investments, right, for people that are either active duty or are veterans. And I know that you sent me a couple of notes, Ben, that you're going to talk about. So were you going to start with sort of like that emergency fund, or you were talking about like life insurance and some things like that? Is that where we wanted to start, just kind of as a foundation?
Yeah, the foundation. Yeah.
Okay, go ahead.
Okay, so there's three key concepts I want to share with you guys. And the first is, what are the first things that you have to do when you come up with your own financial plan? What are the key considerations? And this may surprise you. And then I want to talk about the TSP, the Thrift Savings Plan. That's what the government uses. Anything I tell you about a TSP is also very similar to a 401k in the civilian world. And then the third thing I want to talk about is how the VA disability system works and what some benefits are in the state of California. I practice in California, so I know the laws here and I can explain them to you, but I can probably answer questions if you're from another state as well. So let's start with securing a financial plan. The very first thing that might surprise you is that when you're preparing for your financial future, is to set up an emergency fund. And what an emergency fund is where you have 3 to 6 months of living expenses. That is the money that you need to get by, food, insurance, home, automotive expenses, but whatever that is, set up for at least 3 months. If you're in a situation where you're one parent and you've got a non-working spouse and kiddos at home, you probably need 6 months. And here's why that's so important is I've experienced myself personally, and I've seen on multiple occasions where you have some sort of unexpected life event. In my case, it was a huge tax bill I wasn't expecting. And then I had to come up with money from somewhere to pay it. You know, in your case, it could be a medical bill, could be getting laid off, could be a tree falls on your home, could be a car repair, just something that's unexpected. And if you have to pull money out of a retirement vehicle, like an IRA or a 401k, they're going to charge you for that. And it might be that when you pull it out, the market's down. Like right now, the market's down 25%. So if you had to pull money out of one of your investment accounts right now, you know, you'd pay a penalty, plus you pay tax, plus just a, grind salt into the wound. The market's down 25. And that's where the emergency fund really makes a big difference. And the second thing that might surprise you is your FICO score. And I have a whole lot of clients, they say, hey, I already own a home. I'm not going to borrow any money. I'm not really too concerned about my FICO score. And they may or may not, do things that would hurt their FICO score, such as not paying your credit card off every month. That dings your FICO score. But the FICO score is actually, although it's extremely important when you get a loan, it's also important for a lot of other things in life. I'll give you 2 good examples that are real world. Is all the insurance that you pay, whether it's property insurance, renter's insurance, life insurance, automotive insurance, is all linked to your FICO score. And the insurance companies believe that if you're pretty good at paying your bills on time and you don't stiff anybody that you owe money to, you're probably going to be a safe bet for them investment wise, whether it's car insurance or life insurance. So your FICO score can actually run up your car insurance by about 10%. And here's another one that people don't know with the FICO score is that when you apply for a promotion or a new job, it's really easy for the Human Resources Department to pull your credit report. They almost always do. even if you're in the same company and you're applying for, let's say, a director job or manager job or something where you have more responsibility, human resources, and it's really inexpensive, is going to pull your credit report. And I've seen it twice in my career where a person who was qualified for a position didn't get it because there was something in their credit history that they'd forgotten about that actually dinged them. One case was a person that did a short sell on a home 5 or 6 years earlier, and he was up for VP at a golf club producing company. And somehow they thought, hey, if they had this compromise to creditors, then maybe they're not as responsible as we thought they were. Not saying I agree with it. I'm just saying that FICO score is actually pretty important.
So Ben, let's take a second, we'll just back up a little bit, because for the people that are on the call with us, right, or listening in, we don't know who they are, right? We don't know their ages, we don't know where they live. And so when you're talking about an emergency fund, people are going to be like, yeah, that would be great. I would love to have that, right? But I don't, and I don't know how to start something like that. So, is anyone ever too young to invest, or, what's kind of that starting foundation? They call you and you're like, hey, Ben, I heard you. I want to start getting that reserve fund. I really want to start investing. Take us back to what's that conversation look like with someone? And where do you start? Just from not knowing someone to getting them on the first phone call.
I'm so glad you said that, because the mistake that a lot of folks do is that they just say, hey, I'm going to use my checking account and I'm going to keep an extra $2,000, $3,000, $5,000 in it. And that's my emergency fund. But that doesn't really work as well. What you really want to do is you want to have the money somewhere where it's 100% guaranteed. You cannot lose it. And when I say guaranteed, I mean FDIC insured, like a different bank account or a money market. And you want to have it somewhere where you can't touch it immediately. So a money market fits the bill. So a money market you can open up at any broker, any bank. They pay a little bit higher interest than your savings account, but also it takes a trade date +2 to get your money. So if you saw a really hot item you wanted to buy on a Tuesday, and you called your bank and said, send me the money, you wouldn't have it until Thursday. So sometimes just that 48-hour gap can kind of be like institutionalized patience. And Tracie, most folks I know cannot, especially if they live in California, they cannot afford to just set up 3 months of money to set off to the side. So it's a stretch goal. But I would say just because you can't afford to do that today doesn't mean you shouldn't start. So maybe you do a money market fund, call it $100, and then just put in $20 a month or $25. And just like you do with your retirement savings, where you do something every month, I would say start by doing something and putting it outside of your checking account.
Okay, that's really good information. So when someone does contact a financial advisor like yourself, do you have sort of just that initial, do you have a Zoom meeting? Do you have a phone call? Do you meet in person? And do you have them fill out information? What could they expect from that first initial contact with a financial advisor like yourself?
Well, first of all, you want to make sure that you find a financial advisor that's a fiduciary. And what fiduciary means is that they have a legal obligation to give you recommendations that are in your best interest. That's important. And once you do that, legally, the financial advisor has to identify 3 things and document it. 1, what's your risk tolerance? That is, how do you feel about market volatility? 2, what's your timeline? Do you want to retire at 60 or 70 or never retire? And also, what are your goals? Do you want to do a European trip every year? Do you want to put 3 kiddos through college? Do you and your spouse want to buy a second home somewhere beautiful? And so those 3 things, any fiduciary is going to have to ask and document. And then they're going to ask you a lot of personal questions. They're probably going to ask you, what were your experiences growing up around money? That's important because how our parents budgeted and how we grew up with money affects our views right now. So they're going to ask you a lot of personal questions, and they're going to come up with a tailored plan that, based off their experience and their credentials, they honestly believe is in your best interest.
That's awesome. And really the goal for this is, you being a veteran yourself and trying to build financial wealth for, active duty militaries and for veterans where they may not have this kind of education at their fingertips, right? Or these kind of resources. So tell us a little bit about anything that's like VA specific that you talk about with someone, as a financial advisor, or some tips that you give. I know that we talked about kind of like a disability or benefits, some things like that. If you could talk about that for me.
Well, something that's military specific is the TSP program, and TSP stands for Thrift Savings Program, and it hasn't been around forever, but it's a great idea. So it's the government's answer to a 401k. So when I was active duty, I was in the military for 12 years. Had I stayed 20, I would have gotten 50% of my highest three, but since I didn't stay 20, I got nothing, and so did hundreds of thousands of other people. So the TSP is a really good program. The TSP is a lot like most 401ks in that they have different types of funds you can invest in. If you have a TSP, you'll probably hear things like the G fund, the C fund, the S fund, and I can explain that to you and what they are if you're interested. But in the sake of time, let me just jump to the answer that's probably right for 95% of you, and that is to use the life cycle fund. So if you're in a 401k right now, they call it target retirement date fund. That's what corporate America calls it, but the military calls it a life cycle fund. And the easiest way to come up with the correct life cycle fund for you is you take your birth year and you add 65 to it. And that, and if that comes out to the year 2060 or 2057, then you would be in the 2060 life cycle fund. And the reason why that's probably the best fund for you is because it is automatically balanced. You don't have to go in and check it monthly and rebalance and move things around. And as you get closer to that retirement age, it actually sells stocks and puts more money into government securities, things that are guaranteed, and things that are called fixed income bonds. They don't pay as high, but they're safer. They're not as volatile. So the life cycle fund is probably for 95% of us the best use of the TSP or a 401k.
Okay, and like with corporate America, right? When you have a 401k, you're setting up a deduction directly out of your pay stub. Is that similar, like through their LES? Could they do an automatic deduction to the TSP plan?
They can, and they're actually going to ask you, do you want a pre-tax or a Roth TSP? And I'm going to presume that you may not know the difference, because the vast majority of service members I see, they have a pre-tax TSP, and actually the Roth would be to their advantage. And let me take a minute and tell you why. So the reason that the pre-tax is most common is because it saves you money today. So if you put $100 into your pre-tax IRA or 401k or TSP right now, then of that $100, you're really only going to see $70 less in your paycheck, because that other $30 was going to go to the government anyways. It was going to go to state, federal, and payroll tax. So in essence, you're only $70 less, but you put 100 in. So that's why most folks choose it. But the Roth has been around for about 15 years, and probably for 80 to 90% of the people out there, it's a much better selection. And here's why. When you put money into a Roth, you're never going to pay tax on the gain, ever. And that's a big deal, because we don't know what the tax brackets are going to do in America. We all think taxes are going to become more. We think as we get older, the government's going to charge us more money. We don't know that for a fact, but that's what we think. But with the Roth, it doesn't matter, because you'll never pay tax on that gain. Second thing is that if you put your money in a pre-tax, once you reach the age of 72, the government makes you pull it out because they want their taxes. It's called an RMD, required minimum distribution. If you put money in a Roth, nobody can tell you when to take it out. And then there's a third reason why Roth is better. And I generally don't tell my younger clients this, so I may be getting in trouble here, but here you go. With a Roth, after the money has been in the account for 5 years, you can pull out your principal for any reason. You're not going to pay tax on it. You're not going to pay a penalty. You don't have to write a letter asking for permission. The Roth is your money. And that's how the Roth was designed, to encourage people to put money in. So I'll give you a case, an example. About 6 years ago, my wife and I, we lived in Arizona, but we always wanted to live near the ocean. And of course, putting 20% down on a home in San Diego County is kind of rough. but we went into our Roth and took money out for the down payment. Was that a good idea? I don't know, but there's no way we could have moved to California if we didn't have that option.
Right. And so there's a question. I know we were going to wait till the end, but this is really specific about this topic that you're talking about. So the question is, can you still contribute to the TSP after getting out of the military? I don't know if you know the answer to that.
No, you can't. And that's true with any 401k also. So, and that's the stinker with the TSP is once you leave the military, you've got four options and four legal options. And I'll tell you what they are from worst to best. Number one, you can take that money out and blow it on whatever you want. Legally, you can do that. You're going to pay tax. You're going to pay a penalty, 10% penalty, but you can do it. Two, you can leave the money in the TSP and not touch it. The problem with that is you can't rebalance it and you can't add to it, okay? But you can do that. Third, you can roll it over into your new employer's 401k. Let's say you get a job with the County of San Diego. They have a pretty good retirement plan. You can roll that over. Or fourth, and the best option for you is you can roll that money into what's called a self-directed IRA. And I'll tell you that's the best reason because you can pick the best funds from the best companies in each category, and you have full control over the money. You can actually make a change every month if you want. So once you get out of the military, you're probably going to want to roll that into a self-directed IRA.
Okay, so let me just to repeat that, and I wrote these answers in the chat. So number one, you could take the money out, right? But there could be tax consequences for that. Yep. Number two, you could leave the money in, but you can't and not touch it, but you can't add to it. You cannot add to it. Mm-hmm. Number three, you can roll it over into a new employer's 401k plan. So if you got a civilian job and you wanted to roll that over, you could do that. And then number four, which you think is the best option, is you can roll that money into a self-directed IRA. Does that sum it up?
Yeah, Tracie, you got it all right. I turned the chat on. I see it was Bill that asked that question. Bill, there is one exception where it might make sense for you to roll your TSP into a corporate 401k. And that one exception is that some companies in America will allow you to borrow against your 401k and not charge interest. It's rare, but it does exist. So if your new employer, when you get out of the military, it lets you borrow against your 401k, then it might make sense to roll the TSP into their 401k.
Okay, that makes a lot of sense. So let us know if you have any other questions on that. And then I know we talked about, what fund to use, rolling it over. You had mentioned something about like VA disability and things like that. Do you want to touch on that in case there's anybody that's experienced,
Yeah, I would. Let me just wrap up with the retirement savings just with one comment. Probably like the second or third most common question I get is how much money should I put in? And there's rules of thumb, and the rule of thumb is if you start at age 30 and you save 10% of your earnings, then you'll be able to retire from 65 to 95 with 80% of your living. That's kind of a rule of thumb. So what corporate America did is typically they match the first 5% that you put in because they're encouraging you to get 10%. So in corporate America, if you put in 5%, you get 10%. But in reality, life has become a whole lot more expensive since that rule came out 30 years ago. Literally, that's what my dad talked about when I was a kid, was put 10% of your money away. I'll tell you now, what you probably want to know is how much can you legally save per year? That's a better question. And the answer is if you're under the age of 50 in your TSP or a 401k, you can put up to $19,500 a year into that program. If you're like me and you're over the age of 50, you can put up to $27,000. Okay. And so
you said it's $19,500 up to what age?
Up to age 50.
Okay, up to age 50. And then after age 50, it's how much total?
27,000.
Okay, and that's per year, correct?
And typically it goes up by about $500 a year. And occasionally I have a client who's in a situation where they can afford to max out the TSP, and then they come into some money. It could be a settlement, a death in the family, a trust, something, and they get money, and they're like, wow, what can I do with this? Well, it's legal currently, where you can max out your TSP and you can do an IRA on the side. So let's say you had a relative pass away and they left you $30,000 or $40,000. You could put 19.5 into your TSP and up to $6,000 a year into an IRA outside of the TSP if you're under the age of 50. Okay. So I would tell you, nowadays you need to be saving at least 15% of your income. But honestly, the better question is how do you max out the TSP or 401k every year?
Okay, so the 19.5 or the 27,000 is either in the TSP or the 401k account.
Yep, you got it.
That's great information.
Yeah. So Tracie, you brought up the VA disability process. Let me start by saying this. My branch office is just south of Camp Pendleton, and I deal with a lot of current military and recently ETS, end of time in service. And it seems like 80% of the service members I talk to, as soon as I bring up VA disability, they kind of shut down. And I don't know if it's a macho thing or if they fear that, hey, if I get this compensation, somebody else won't that needs it more. And I have to assure you that's not the case. It's not a zero sum. There's not a budget on VA disability. If you've served in the military, I assure you, you're eligible for at least 10%. And if you don't believe me, call me and I'll tell you about it. Okay. And what the 10% is, it's called tinnitus or tinnitus, ringing in the ears. So if you've gone to basic training and you've been around gunfire, like we all did in basic training, if you don't have it now, later in life, you'll notice that when it's real quiet, you sometimes hear ringing in your ears. And that's a medical condition and it pays 10% for the rest of your life. And that 10% currently comes out to $150 a month tax-free. And your first thought is, wow, that's not a lot. Who cares? And I'll tell you that opens up a whole lot of tax savings and other savings for you having a disability. Tracie can tell you about the VA loan and how much money that saves you if you have a disability rating of 10%. Okay, but let me tell you what other things you can save. If you live in California and you have any disability rating, your kids, like my kids, can go to a UC or CSU college for no tuition, literally. Okay, you'll pay the books, the fees, the insurance, the student union fee, but you won't pay tuition. That's a really big deal. Once your VA disability goes above 20%, you get health care for life for your condition. So in my case, I had a bad airborne landing, broken ankle. My toes did funny stuff. So I get free shoes and orthotics for the rest of my life. Once your disability goes over 50%, you get free prescriptions for the rest of your life. So for example, I've got high cholesterol. I take simvastatin. That's paid for the rest of my life. And eyeglasses, over 50%. These are VA eyeglasses. I get a free appointment. I get a free appointment a year and free glasses every 2 years. And when I first applied for my disability in '96, what I used was a service organization called the American Legion. And I'll tell you more about that in a couple minutes. But when I first applied for the disability, it was rejected. And I thought, oh, well, that is what it is. Thanks for trying. And then the American Legion rep called me back and he said, hey, dummy, that's just how the process works. You got to appeal it. And so I didn't know what I was doing, but I just followed their advice. And I got an additional 30% on top of that. So if you haven't ever applied for a VA disability, I have to tell you, it's not an unpleasant process nowadays. It used to be 20 years ago when you would go into the hospital, they would make you feel, I don't know, I felt like a criminal, like I was trying to cheat the system, and I'm not. But nowadays, when I've worked on my disability, and my son, who's been out for a couple years, it was veterans helping us each step of the way. And PTSD, post-traumatic stress disorder, is probably the most common disability that's granted. I can tell you more about it in details. And if you were in a conflict, you qualify for it. If you were in an accident or someone got injured, you qualify for it. And if you're still active duty or just a few years out, it could be that you don't think you have PTSD. I didn't think I had it for 20 years. And I went online and I looked up what the symptoms are. And that's kind of when it hit me. I could probably use some help. And it's my personal experience that the VA system in California is excellent. I go to the VA Oceanside Clinic to see a doctor. I go to the La Jolla Medical Clinic for things like X-rays and surgeries. And I have to tell you, it's very good care. I think you'd be happy with it. So where you decide to live one day, the VA benefits could play into as well. In my financial advisor practice, I have clients from all over the U.S. and some states like California and Texas have outstanding VA benefits. For example, in the state of Texas, if you have a 100% disability, you pay no property tax. And that's huge because that's how Texas taxes most of their people, is through property tax. In California, if you have a 100% disability, and it's not as hard to get as you think, give me a call if you want. I'll talk you through the process. But if you do, the state gives you a $150,000 exemption on your property tax. Tracy, that was a question one of your clients had today, and I'll call them to tell them about it. They also let you register one vehicle for free every year. And one thing that I like about the property tax exemption is that once I'm qualified for it, it actually transfers to my wife as long as she stays in this home. So most VA benefits, once I die, they're gone. But with the property tax exemption, unless my wife moves or remarries, she gets to keep that $150,000 a year property tax exemption. Another one is called Chapter 35, which is a federal benefit. It doesn't matter where you live, but if you're a 100% disabled veteran, wherever you live in America, when your kids go to college up to the age of 26, they're eligible for $1,024 and call it $1,000 a month that they're in school for living expenses.
That is awesome. And to touch on, like you were saying, the VA funding fee, just to kind of add that. So as a mortgage lender, when you are looking to possibly purchase a home and use your VA benefit, we'll pull what's called your certificate of eligibility. I went over this on the last call that we had. And when you are classified as at least 10% with disability, then you're exempt from that funding fee. So if someone is not exempt, you're looking at about 2.3% for your first time use when buying a home that the Veterans Administration charges. So it's not a mortgage lender fee. It's something that the VA finances into your loan amount. But again, that goes away. Same if you were doing a cash out refinance on a VA loan, it could be up to 3.6% in a VA funding fee that would be completely waived. So those are definitely things to try and take advantage of and talk to professionals, like Ben and myself, if you're in a situation of investing or buying a home, to really understand what you're eligible for, because that's why we're having these calls and conversations. Not a lot of people actually know, right, that are either active duty or veterans, what type of benefits they actually receive. So I think that's great.
Tracy, I just want to throw in there that I've used the VA home loan, and it's not difficult to use. It's an easy process. It's not harder than anything else. And my fear when I moved to California is that some home buyers wouldn't want a home, or some home sellers wouldn't want a buyer using the VA loan. That was not my experience. When I put a bid in on a home, it wasn't an issue. They didn't really care that I had the VA loan. It was a non-issue.
Yeah, especially in California. I mean, it's such a active military spot, right? And so there was always this facade that VA home loans were worse or harder or longer to qualify or close, and that's just not the truth. I mean, we could close a VA home loan as quickly as any other loan type, which is great. And the appraisal guidelines are the same as any other loan type, and the advantage really to someone is, if you have that entitlement and you're eligible, you don't have to put a down payment. And that's something where, if you have money saved up to purchase a home, but you could get a VA loan and not put any money down, that's a great opportunity for you to take that money and talk to someone like Ben, right? And instead of putting it into the equity of your home, maybe you could invest it elsewhere. And so those are all things that we kind of do as a team together, right? So when we talk to a client, we figure out what's best for their personal situation, their family. Are they looking to purchase a home in the future? How much do they have in savings? How old are their kids, right? We kind of build that plan for people, I think.
And Tracie, a common question I get, well, occasionally I have clients that are in a situation where they've already spoken to you and they're like, what? I can save 2.3%? How do I get this VA rating? And I can help you with that, but it takes about 6 to 7 months, just so you know. I can explain the process if you want, but it does take about 6 or 7 months.
Yeah, it does take, and I think I also, I have a connection at the San Diego County tax assessors, and I did have a client who was able to get that 100% rating. And I reached out to him and he was so kind today. He sent an email and said, here are all of the things that you just need to send in and provide to us to get that benefit with the property taxes. So like you said, everybody's really welcome, to help. And I just wanted to let you know that, Lonnie, I did receive your message. And that is to Lonnie. Oh, there's to Ben. Okay. So I have your email. Here's his phone number. Okay, great. So yeah, we want to make sure, I put all of our contact information also up at the top. So you can email, I mean, it's, you might have private questions, so you don't have to obviously put them in the chat, but after this meeting, you're able to either call or email either Ben or myself, and we could give you more info. So Ben, just to get back to, like having that initial consultation, because I personally invest with you, you basically you send like a form, right, to fill out to kind of understand what your goals are and, and what you're looking to do. And then from that's when you have that next call with someone. So if you were to talk to someone like Lonnie, kind of what does that conversation look like?
Well, probably initially I would ask her what her chief concern is, and she might have like a quick question or something. And I would just try to answer that. Maybe her question is, my uncle died and there's no will, what's going to happen? Well, I would find out, does she have a chief concern? And then if Lonnie was open to setting up a financial plan, I would want to understand things about her situation as far as dependents. Is she going to have to support her parents later in life? I'm shocked at how many people don't know that question until it faces them. Do I have to pay for my parents when later in life, or are they going to leave me something? You don't know, but there's an intelligent way to ask. So you don't come across as, Mom, what do I get when you die?
Yeah, what are you leaving me?
Yeah, what are you leaving me? So the first thing I always do is I try to figure out all the things that could be surprises and get an answer. And that goes back to the emergency fund and insurance and what could go wrong. For example, I have a 15-year-old car with $300,000. Okay, we probably need to set up a car fund for you so that a year or two down the road you can get something that's a bit, a bit more reliable.
And so I don't know if you're getting this as a most common question right now in your position. I mean, for me as a mortgage loan officer, every day I'm asked about interest rates and what they're doing. So my assumption is you're getting the question, what's the stock market doing? Is this a good time to invest? And what do you tell people now that ask you that question?
Well, the reality is you can make money on the market, whether it goes up or down. Like right now, the market's down. So the play is one of two things. One, you put money into what's called a CD, certificate of deposit. They're FDIC insured. They're guaranteed. You can't lose money. You can make 2.8% for a 1-year CD. I know inflation's 8.6, but at least it's not losing money. And then there's type of stocks that are called income stocks or dividend stocks. So there's companies like Pfizer that pay a 5 or 6% dividend. Target's another one. So you can make money on the stock market whichever way it moves. People often ask me, how soon do I think the economy will get better? Frankly, I have no idea. I really don't. When I read the Wall Street Journal, the experts say that they think it will be 6 to 18 months of possible recession, high inflation. And if that's the case, then the best thing is to be defensive and to not risk any money in the next 18 months, to make sure that you have emergency money, you've got money set aside for anything that you're going to need to buy in the next couple of years, the next 2 years. It's probably the right time now for some defensive plays. And usually the Federal Reserve with their rate, when they come out, they're usually pretty close to predicting the trough of the market. So when they stop raising the rate, we're probably a quarter or two away from a return, but they're continuing to raise the rate right now. So I would say safety is the best place to put your money right now. And that doesn't mean a savings account, because your savings account pays 0.01 or 0.03%. You're really losing a lot of money doing that. You're much better off parking in a CD, certificate of deposit, that's FDIC insured and guaranteed.
Okay, that's awesome. And so I wanted to leave us a few minutes for any question and answers. I know Bill just sent a message that he had to jump off, but I will, this has been recorded, so I will send it out to everybody that actually registered. And I know Kristlyn hopped on a little bit late, but I want to definitely get this message out. I think it's so important for people to have resources like yourself. And so here's a question from Lonnie. And Lonnie, I apologize. I don't know. We're saying she. I don't know if it's a she or a he. So I'm just gonna call you Lonnie. So your question was, my son said to invest in bonds. What's your opinion? Ben, do you have an opinion on that?
Yeah, he could be right. It depends on your situation. So she. Okay, thanks.
Perfect.
So
we guessed right. Just wanted to
we
be
guessed
sure.
right. We guessed right. So Lonnie, bonds could be a good investment if you're a higher income earner. I don't know what your adjusted gross income is, but if you're a higher income, there's a bond type called a municipal bond that's triple tax free. You don't pay state tax on it, you don't pay local tax, and you don't pay federal tax. So the bond itself may only pay 3.5%, 4%, but okay, thanks. I see the number now. Okay, in your case, then I don't know if I would do a bond in your case. I would say that the bond can go up by 3% or it can go down by 3%. The certificate of deposit is going to go up by 2.8 guaranteed. It's FDIC insured. So in your situation, a bond would be better than an equity or a stock, but it's still a little bit of a risk. And here's why. When interest rates are going up like they are right now, bonds go down. So if you bought a bond right now, chances are over the next year and a half, you would lose money. I don't know that for a fact, but as long as interest rates continue to go up, you would lose money. So,
yeah, and they're still projecting rates to go up higher, unfortunately. So that seems like that's going to be the case for a bit.
Yeah, I wouldn't buy a bond right now, Lonnie. I would just do a certificate of deposit. Actually, if I were you in your situation, does the 22K mean that's how much you have to invest, Lonnie? And if it does, what I would do is I would do what's called a CD ladder. And what a CD ladder is when, let's say you have $100, I'm making this up. You put $25 into a 3-month CD, $25 into a 6-month CD, and then the rest, the $50, into a 1-year CD. And the reason I'm saying that is because every 3 months, you've got money that's coming due from the CD. So you can decide, is the market better and I want to get into bonds or investments, or is the market continuing to decline and I want to stay in a CD? So that way, if there's a quick market rebound that's unpredictable, it just happens. Gosh, wouldn't that be nice? In 3 months, you'll have money available that you can take advantage of it. So a CD ladder is probably the safest thing that gives you the most options, Lonnie.
That's great, Ben. Does anybody have any other questions? And then if they don't, Ben, I would just like you to just be able to kind of reiterate the best way to get in touch with you, your contact information again, if that's okay, if you want to do that for everyone.
Yeah, you got it. So in the, I'm going to type in my office phone number, and I'm going to type in my email address, and I'm in Pacific Standard Time Zone, and I'm usually in my office from 9 to 4.
We have 760-439-9019 in case people don't see the chat. And then Ben's also going to type in your email address. And so you just welcome phone calls, right? Shoot an email, just kind of have that discussion. And it's ben.schulte. It's ben.schulte@edwardjones.com.
Mm-hmm, mm-hmm.
Okay, great.
So, and Lonnie, there's no cost or commitment. If you have a question, give me a call. I'd be glad to help you.
That's awesome. Okay. And just again, before we wrap up, my name is Tracie Schmidt. I am a residential mortgage loan officer. I live in San Diego and I'm licensed throughout California, but like what Ben was saying, where, he knows referrals and people even in other states maybe, or right, could answer those questions. Same thing. So I'm licensed, my region is licensed in 38 states across the country. So, we're licensed in Texas and other places where you could come up on these benefits and either of buying a home, right, or doing some investment. So, and you were talking about PTSD. So the next call that we're going to have, actually, we're going to bring in someone that is part of our networking group here in San Diego. And she actually is an acupuncturist. And so, and she, Jen, who's in our group. So I've actually been to her. She's actually treated a lot of people through acupuncture that have had PTSD. So she's going to talk a little bit about that, what that looks like. And that'll be the next call that we'll send out to everyone as well. So Ben, I want to really appreciate you being on here and taking the time. And any last words of advice or wisdom you want to share before we wrap up?
Yeah, so I just typed in the general information line to the VA. It's that 1-800 phone number, 1-800-827-1000. It's staffed by veterans. And when you call, if you have a question about a benefit or a hospital or your service records, the veteran that answers that number, if they don't have the answer, they'll know where to send you. And I've had a great experience dealing with the VA. It requires patience, right? Like anything with the government. But the people that work there, they really want to help you. They're veterans too. And they realize that it can be frustrating getting things done sometimes through the VA. And I can just say they're generally always in a good mood and they want to help you.
That's awesome. Well, thank you. Have an amazing night, Ben. I really appreciate your time. And again, I'll get the recording out to you and to everybody that registered so they could go back to it, have all our contact information again, and even just share it with people. If you have friends or family members or coworkers, and they don't have to just be active duty or a veteran, but we really want to focus and specialize, on those people. But send it out, have everybody, I think, needs kind of an investment plan, especially when the market shifts as fast as it did right now. And gas is going up and groceries are going up. And, do you have money that you can access? And what's the way for you not to pay as much in taxes to access it, or pulling equity out of your home, or like what could you possibly do to just make sure that you're kind of riding this unfortunate wave that we're in right now in the economy? So, well, thank you, Ben.
Thanks, guys. Bye now.